Hi everyone, me again. Okay, so let's go over exercise 110, 111, and 112. And you can see how I've written them there that they actually go together. Okay, so let's go look at the actual question and see what I mean. Okay, so here, exercise 110, it's saying you're going to create an income statement. And it's actually giving you a check figure saying that the profit is $11,110. Let's scroll down. Now, exercise 111, it's saying the statement of changes in equity. So, and exercise 112 is the balance sheet. Okay, so what it wants you to do is all of these accounts, okay, cash, accounts receivable, rent expense, so on and so forth. It wants you to use them all, but only use them once take the ones that belong in the income statement and put them in the income statement, the ones that go in the statement of changes in equity and create a statement of changes in equity, and then create a balance sheet. Okay. So the first thing we need to do is read the detail and see what else they're telling us, if they're telling us anything that we need to know. Okay, so on November 1st, Jean Higgins started a wedding planning company. So again, it's a service, and that's what this bookkeeping course covers are services. We're not selling stuff, we're providing services. Okay, so wedding planning company, Extraordinary Studios. On November 30th, the company's records show the following information. Use this information to prepare the November income statement for the business. Okay, similar to Exhibit 1.8. So again, it's guiding you back to the examples in your textbook chapter. So again, it's not telling you you have to use all of the accounts in this first statement, only the ones that are relevant. So we know that in an income statement, we have revenue minus expenses. So I think the first thing we should do is go through the accounts and figure where they belong, just like we did in exercise 1-7, and then there won't be any confusion. Okay, so we know cash is an asset, so it goes on the balance sheet. We know accounts receivable is an asset, so it goes on the balance sheet. Office supplies is also an asset. If it was an expense, it would say office supplies expense. Okay, so expenses always have the word expense in them. Automobiles is an asset. Office equipment is an asset. Accounts payable is a liability. Owner's investments goes on the statement of changes in equity. Owner's withdrawals goes on the statement of changes in equity. Wedding consulting revenue is a revenue account, so it goes on the income statement, and then we have 4 expenses. So as you can see, they've actually even grouped the accounts together for you. So all the assets are together, the liability is together, the owner's investment and withdrawals together, then there's the revenue, and then there's the 4 expenses. Okay, so we know for the income statement we need revenue and we need the 4 expenses. So let's go have a look. And please get used to the layout, okay? Because in accounting, it's very particular. It has to be revenue minus expenses. Okay, so let's go have a look at the solution. So here's the solution. Okay, so we have an income statement, we have revenue, and we've listed wedding consulting revenue. Operating expenses, we've listed the salary, the rent, the telephone, the utilities, and then we've totaled them. And then we have revenue minus the total expenses gives us the profit of $11,110. And that does match our check figure. Okay. So now for 111, you again need to prepare the statement of changes in equity similar to Exhibit 1.9. So again, go back to your textbook, whether it's the ebook or paper copy, and have a look at Exhibit 1.9 to find the layout of the statement of changes in equity. Okay, so let's go have a look at the solution. Okay, so we know that we open with November 1st, the capital, and because the company only started on November 1st, there is no opening balance. It's zero. But the owner did make an investment of 84,000, as you could see from the list, right? Owner investment 84,000. We know the owner also withdrew 3,360. There's your less withdrawals by the owner, 3,360. And then we've got the profit. Remember, our statements link together. So the profit from our income statement gets brought down to our statement of changes in equity. So we've got a zero opening. We've got an investment by the owner plus the profit gives us a total inputs. Then we have less the withdrawals by the owner to give us an ending balance of November 30th, which is 91,750. Don't worry right now about the analysis component, okay? All right, so let's go back. Oops, let's go back. So now we need our balance sheet. Oh, and we can check our figure, 91,750. So we know our check figure on our statement of changes in equity. We know we're correct. So now we have our balance sheet. So let's go back. We have a check figure, so we know our total assets are 99,250. But let's have a look. So we know we've used our investments, we've used our withdrawals, we've used our revenue and all of our expenses. So we can tick those off. So maybe the easiest way to do it is to just check them off, know that you've used them so that you don't miss any. Because if you miss one, you're not going to balance. Okay, so we know all of our assets, cash, accounts receivable, office supplies, automobiles, and office equipment. So we list those under our assets. And again, get used to the layout of the financial statements here, okay? So we've got cash, accounts receivable, office supplies, automobiles, office equipment. We add those up, we get 99,250, which matches our check figure. All right, so now we need to do the other side. So the only liability we have is accounts payable for 7,500. So we come over here, liability, 7,500. We need to bring in our ending capital from our previous statement, which is 91,750. Bring that down, 91,750. Add those two together, which is 99,250. And the total liabilities and equity balances with our total assets. Okay. Let me know if you have any questions, and we know we've balanced with our check figures, 99,250, 91,750. We've used all of our accounts. Okay. Wonderful. Thanks, everyone. Let me know if you have any questions.